Good day everyone, welcome to a new update, and today we're going to discuss a tweet that I've been sending out earlier, which is about the fact whether Bitcoin is ready for a big bull cycle to be happening. And I think that we're actually getting towards that part in the cycle. We've already seen tremendous returns in the past year. We've seen platforms accelerating, we've seen the rise of NFTs, and we've seen the ecosystem grow even more, which means that the adoption is growing heavily too, and that is something that goes exponential. So the actual big gains, or most of the gains, are made at the last part of the cycle. So we're going to discuss that, but before we're going to continue, do not forget to subscribe beneath and like this YouTube update, and check out my Twitter and Instagram where you can find daily content on the markets. So when we are looking at the market cycle at this point, we are seeing a period of relative confusion in which, as a matter of fact, the edge of the market is getting more complex. If you recall correctly, and if you have been in this market for a while, then you already know that the markets have been very easy in 2017. Everything went up. The correlations were quite high between the platforms, and right now we can see that the markets are getting complex and that the edge is harder to find as Bitcoin has been correcting, and still many altcoins are following the path of Bitcoin, but selectively we see ecosystem doing relatively well in terms of Phantom, for instance, but also Matic has been showing strength, and also DeFi projects have been showing strength, which we're going to cover tomorrow, as then I'm discussing my crypto portfolio and essentially give you an insight in what we're doing in the platform on 8 Global. So when we're looking at that price action, we also got the confusion of the 4-year cycle. I think that 50% is bearish, 50% is bullish, given that people assume that we've got a 4-year cycle and that the markets are topping out. But if we combine if we convert towards the .com bubble, the period right now is very comparable to 1907, 1908, in which the adoption started to grow, in which the actual market cap started to grow, which is also the case with the Nasdaq and all the indices back in that period, in which internet started to hype up, and the actual acceleration happened in the years after. So I'm assuming, and especially if you look at the on-chain analysis, which we'll be focusing on in a little bit, if we're looking at the markets and if we look at the fact that we're getting that fundamental adoption through multiple countries, but also through people seeking for a higher APR through DeFi, or simply using a transfer, or using crypto to transfer their money from from another way or another part of the world to another one, or investing because of the inflation numbers accelerating. That is number one. The second one is the fact that institutions are creating financial instruments to actually bring itself into the markets, and then we still overall have that inflation discussion topic, in which crypto is one of the best assets to jump into. So that's enough of introduction. Let's head towards the on-chain analysis, in which we're going to discuss the markets, or at least going to discuss what we are seeing over there. So when we're looking at the on-chain analysis, I've used this chart from William Clemente and Zusu, which is tweeted earlier, which showed the entity-adjusted dormancy flow, and gave a pretty interesting indicator of where we're currently acting in the markets. We've had bounces in this green zone, and you can see the chart of Bitcoin from 2011 until now, and the orange one is the entity-adjusted dormancy flow. As you can see here, in the black one is the price against USD. From that perspective, we've seen a few bounces from the green zone, which is relatively the lowest side of the entity adjustment dormancy flow, and those have been the actual bottoms of the market during that period. 2018, we've had a bounce from this low. We've also did see the exact same in 2020. We did see exact same in the previous period of the correction in May, and we're currently getting into this period of, or at least getting into this zone again, while Bitcoin is currently bouncing from the region around 40k. So I've shared this and I said it's ready for the biggest bull run in history, given the fact that the entity adjusted dormancy flow shows whether the Bitcoin is valued at true price or not. And in this case, it's the rate. What actually is it? Well, it's the ratio of the current market capitalization and the annualized dormancy value measured in USD. It can be used to time market lows and assess whether the bull market remains in relatively normal conditions. So you can use multiple indicators to actually indicate whether we are at a low, but we can conclude that based on this figure and this on-chain chart, that it's definitely not overvalued, but it's actually undervalued, and that you should be looking for longs instead of shorts. Then second, if we get a true run of the markets, the actual money is made in the last part of the cycle. So in 2017, we've seen an accelerated parabolic run in which 90% of the gains were made in the last 10% of the actual run of that cycle. So the run from 2 to 20k didn't take that long and accelerated the actual returns that you could be making in the bull cycle. Right now, we've seen a big run from 3.7k to 60k, but the actual gains are made at the last part of the cycle. But this indicator is showing whether you should be looking for longs or not. And based on this fact, I've actually been saying, hey, it makes sense to look for longs rather than shorts at this point, given the fact that the valuation of Bitcoin is relatively low. Now, if we're looking at some other indication or metrics at this stage, we've got the Pew multiple, which is also created by the same person as the one that has been creating the previous indicator that we were looking at. This one shows that we're just in the middle of a cycle, not overvalued, not undervalued, so that is pretty much fine to look at. We also got the MVR-V ratio, which is currently showing that we're now nowhere near an overvaluation, and it's actually showing that the previous run to 69k didn't even get Bitcoin into hype and euphoria, which was actually the case in the first run, in which the market value to realized value has been accelerating quite fast. And this is also very comparable to the sentiment, as the sentiment has turned into ultra bullish mode, if you recall correctly, in which we saw the hype accelerate quite fast and overall media attention started to grow. And many accounts have been growing heavily on social media as that interest increased. And I think that a bunch of people have been jumping into crypto during this period. But the indications of the MVR-V ratio show that we're currently just acting at the lower bounds instead of at the higher bounds. So this is another conclusion or confirmation that we're actually getting at the interesting zones to long instead of looking at shorts at this stage. So when we're looking at a long-term holder supply, it is also giving us an indication. We've seen the long-term holder supply increase heavily in the previous period. Even in the first run up after the heavy correction, as we can see here, we've got a long-term holder supply being increased, through which it is assumed that long-term holders are accumulating their positions instead of selling. So if we correctly look at the first indicators that we were using, they show that the valuation of Bitcoin is relatively low compared to the true valuation of Bitcoin at this stage. That is an indicator that or at least a analysis that you could be using. And if you want to use that in a way of investment thesis, the long-term holder supply combines the fact that we are at a low valuation because long-term holders are accumulating their positions, and they are currently also doing it as we slowly are crawling back up with the long-term holder supply. The moment that we get into a hyped version, or that we start to accelerate quite fast, you can see that all those indicators are getting into hype territory. Sentiment overall becomes bullish, and then when the long-term holders are starting to sell off, which we have been seeing in the first part of 2021, that is the period where you should be looking to actually start decreasing your positions, or at least become more interested in decreasing that position. So are we ready for a big run in the bull cycle of Bitcoin? Definitely think we are, and I think that you should be looking for longs rather than shorts. I hope you have enjoyed this update. I'll be back tomorrow. Don't forget to subscribe beneath and like this YouTube update, and have a wonderful day.